And if we continue, we don't have to see a lot of changes. If what we have this moment in time in economic development and the economic numbers, the Fed is going to raise rates. In other words, if inflation continues to move as it is moving, slow and steady, there's got to be a change. If this, of course, is inflation, but in particular, if gas prices continue to move upward and we start to see that $3.50, $3.75, $4 maybe range of gasoline prices, that is going to be a huge problem that they're going to have to deal with. That is going to create a lot of inflation, not inflation on just gasoline. You know, this is a silly thing to say, but I'll say it anyway because I know you know this. But most of the products that we get at the grocery store come by way of diesel fuel. Those prices go up, the cost of goods go up. So we've already seen increases in particularly produce and cold deliveries, you know, whether they be frozen foods, meats or whatever. We are seeing increases. We will continue to see increases as long as gas prices go up. Then we got the underlying commodity of corn, beans, and produce going up as well, driving the price up. So the Fed's going to be staring at some significant inflation. I probably will feel a little funny calling 4% significant inflation or 4.5% even. We're a long way away from that. But it'll only be significant in the minds of a lot of people, and it won't necessarily be significant for markets, but it will likely be for the economy. But it's going to be a behavioral problem for the economy. It won't really be that significant. Listen, for 20 years, from the beginning of the Clinton administration through the end of George W., the end of George W., the end of the Clinton years, I would say, you know, into or leading up to the beginning of the Obama era, we had an average inflation. It wasn't in the last 5 years of that 20-year period, but we still averaged out probably close to 4.5%, 4.25%. We did have some heavy inflation years. The economy did just fine. It's not that we can't operate or function under those conditions, but I do think we are going to see wage inflation that could be significant and dramatic in some way, shape, or form. And it's very difficult to back out of that. Once you get going down that road, you can't just turn it off. You can't wake up on January 1st and tell all your employees, hey, by the way, I know we're all making pretty good money and we've got, you know, we've had some inflation, all that. And for those of you making $16 an hour is now going to be $14. For those of you who are paying, we were paying the salaries of $40,000, it's now going to be $37,000. You're not going to do that. You're not going to turn back. What you may do is lay off some people to make up for the difference, and that's tragic, and that'll be sad, and that's going to hurt the economy. But that's likely the way it's going to be. Companies don't want to do that, so therefore they're trying to walk as lightly as they can before they just willy-nilly say, all right, we're going to give how much, you were making $11. If you come back to work, we're going to give you 16. I mean, they're not going to just do that to get people back to make some money now while the environment's good, because they can't turn that back. And they know that. So I believe that consumers and business sentiment, maybe for the first time in 30 or 40 years, is actually ahead of the markets right now from being right. You know, the markets are a wonderful barometer of where things are going. And they generally are right, and they're generally somewhat ahead of the consumer or even sometimes business sentiment curve. It's not looking like that now. It's looking quite the opposite, which is odd. It's an odd place to be. But I think it's only because Wall Street is being driven far more by their ideological blinders that they have on. So they have lost an inability to see to the left or see to the right. They are staring at that tree in front of them, which is, you know, God save the Biden regime. I mean, really, that's where they are. And they're so happy that they were right. And they're so happy, and they don't want to seem like they would be against the social policies of the president, that they can't see anything else, and they're not going to make good decisions for you and I.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.